Hey, everybody, and welcome to our podcast show. On our podcast show this week, we'll be talking about SVB. Yes, the Silicon Valley Bank that was recently taken into receivership by the US government. Why? What happened? Well, before we start, we would like to make a disclaimer. We are not financial experts, and we do not give any financial advice. So any investments that you make are at your own risk. Okay.
Peril. It's at your own peril.
That's at your own peril. So, well, as you know, the Fed has been making or hiking interest rates for the past 2 years to try and curb high inflation. High interest rates mean bad for consumers and also bad for businesses. It got to a point where banks can't offer low interest rate loans for businesses, especially for startups, right? So normally this wouldn't be a big issue, but SVB was overexposed, right? So they had a total of assets of, I think, $209 billion and acted like a hedge fund, making risky bets, right? So they adopted, it was reported that it was over 5%, just a little bit over 5% of the $209 billion were insured deposits. So what happened to the rest? Well, it was loaned out. And that's just crazy. 95% of deposits were loaned out.
Wow.
For other banks and stuff like that. So they only had 5%, which was customs deposits, which were insured. So think about that. That's a lot of money.
That's a lot.
Right? So when customers got wind of this, they all tried to withdraw their money from the SVB and hence a bank run, right? So the problem was SVB didn't have enough liquid funds for the customers' withdrawals. And the US government had to step in to take it back into receivership, thus protecting customers' deposits. What a mess. So Stephen, what do you make of this?
Most bank deposits are protected, but not the whole thing. There's only a certain portion that is protected, unless they can broker a deal to take all those debts and maybe another bank takes over. In this case, another bank is looking to take over. I can't remember which one. And this problem caused ripples in the banking industry all the way over to Switzerland. Credit Suisse also had an issue as well too. And as you know, Swiss bank accounts, very popular, numbered accounts. So many of these, and Credit Suisse has been having issues for years, right? So this was just the nail in the coffin that started to collapse Credit Suisse as well too. And they were the other big casualty of this as well too. There are some other things that have been happening, but I think that overall, a lot of these accounts, this is operating capital, right? This is operating capital. Even The Verge, another media outlet that you may have heard of, they have all of their credit cards and bank accounts in the SVB.
Crazy.
So part of their operating capital was impacted. So as they were getting ready for like South by Southwest and stuff like that, and they're trying to book their flights, they couldn't book their flights. So a lot of things happened across any tech company that touches this bank had problems. Some of the brands that you might know, Roku, they do the streaming sticks. They are integrated in televisions. They had a good chunk of money, like tens of millions of dollars inside that bank. And that was frozen.
Yeah. A lot of startups started off with Silicon Bank, bank, and it gives them loans, and it's great for them to succeed because, of course, you have a backing, right?
Yeah.
And people were using it as banking services and things like that as well. But having your entire business frozen because of this, it's just going to be nuts.
It's their operating capital. That means that you can't pay bills. You can't like Roblox. Roblox had tons of servers that are running this entire game. They can't issue tokens. Like they can't even take money for you for buying skins and other things online. The in-game purchases, they can't even receive that money now. So how are they going to take care of that? How are they going to take care of the servers? How are they going to take care of the technicians, the coders and everything like that? Roblox is a big game. That's a big deal, right? And these are only the companies that we actually know of, because Silicon Valley Bank also takes in a lot of the companies that have VC money behind them. And these VCs are developing super secret technologies waiting to put them into the world, right? So it is said that because of this whole collapse of the bank of record for all of these venture capital backed companies within Silicon Valley and the tech industry as a whole, an entire generation of entrepreneurs will be wiped out.
That's right. I heard about that, and it's a shame because it's these entrepreneurial inventions and all these startups. It actually drive technology, drive businesses, drive all this new stuff. And without that, even Uber was started as a startup, right?
Yeah,
and things like that. And they needed money from where? Of course, VCs and things like that. And one of them would be the Silicon Valley Bank and things like that. So it's a shame. And also think about it. The total assets they have is $209 billion.
That's a lot.
Where is all of that going to?
They
kept 5% of that as insured deposits, but
Not
then
enough.
what happened to the rest? It's just crazy.
It's tied up in development and technologies and whatnot. I mean, think about it this way. Most startups have a exit plan. One of their exit plans is to either make it big on their own or B, get bought out by Google or Microsoft or anything like that. So as these companies are developing their technologies for buyout, now they can't do anything. So they're stuck. They're dead. They're dead in the water. And the other thing that is really totally unfortunate is the fact that now, because these technologies can't go forward, no one's going to buy your stuff. You're stuck. You're done.
Yeah,
you're finished. Like, this is why a whole generation of entrepreneurs that have these super secret technologies, they're going to be done. And this is going to also affect a lot of EV manufacturers that were developing technologies, right? We don't know who the casualties are yet. There's bound to be. Like Aptera was based in the area. They make the solar powered car that goes for 1,000 kilometers. There's a number of them. I don't know if Rivian was affected, but that would be a big deal as well too. Of course, they have big bank daddy Bezos to bail them out because they are Rivian and Amazon has a relationship with them. But this affects so much more than just the people in Silicon Valley. This affects the entire tech industry. And because whoever's buying, because SVB was so risky, like 5% deposits on hand, and they loaned everything else out. Any new bank that's going to step in is going to be much more conservative. So that means that all of the Hail Marys, all of the YOLOs, they're not going to happen.
Yeah,
they're not going to happen.
It's just too risky because you're debt laden, and if you buy them out or if you take care of it, all that debt's gonna be on you, right? Or on the bank, or whoever bank's gonna be coming in for the rescue. So nobody touched it, and the U.S. government had to step in to protect the customers' deposits, and that's just nuts. Yeah. Now it's a fact. Most, if not all banks, are on a 10-to-1 ratio, right? A leveraged risk. And what that means is that the bank only keeps about 10% of your money, right? And the rest is loaned out. Yeah. And that's 90% of your money. 90% of your money going to others, be it banks or businesses and things like that. Interest is then paid on the money that they loan out or lend out, right? Yeah. And, to my friends, how is the bank? This is how banks makes money. Right? With your money, you don't actually make a dime. Yeah. So how do you feel about that? How do you feel about banks now?
Well, this bank bought bonds. They bought government bonds. You would think that they were safe, right? When the interest rate is stable, but the interest rates went up.
Oh yeah.
So this has an inverse connection, I believe. I don't know how to explain this exactly. Maybe someone in the comments can help us out a little bit with that. Yeah. But if you bought bonds at a certain amount of interest and everything like that, and they're safe. Yeah. They're no longer as safe once the interest rates go up.
The interest rates go up, then you actually, if you have to sell your bonds, you actually lose money.
Yes.
So I think there was an investigation going on now, is that some of these executives in the SVB decided to sell their bonds or sell shares or stuff like that to raise money.
Yes.
Just before it kind of crashed, because they knew there was something going on with the bank run and they had to get money back, and they couldn't get money back in time.
No.
Right. And that was a bit of a mess. By the way, for those who don't know, a UK subsidiary of SVB was sold to HSBC UK, right? So they had a UK subsidiary, SVB. HSBC UK came along and bought the remaining whatever it was for a mere £1, right? plus their entire debt, of course, and that's around about $6.5 billion worth of loans and around about $8 billion of deposits.
Wow.
But wait, the executives that pulled this off were awarded between $10 to $50 million in bonuses. How do you feel about that now?
I feel, wow, like I have £1. Can I buy that bank? Debt,
Plus debt.
please. I'll buy all that debt. I mean, to get some slime ball to go out and collect it for you is probably cheap.
Yeah, but the executives who did this, was awarded $15 million for having this, transaction go through.
It's capitalism in overdrive. It's a good find. You find all this debt out there, you buy it for £1, and you if you can cover even 10% of that, you've made the bank tons of money.
Yeah.
That's the downs. That's bad, right? So you have to go after everyone, harass their families and everyone they know to shake them for 10%. Like, even if you get a portion of it, right? I know people are hurting and everything like that, but this is the perverted part of capitalism.
That's right. I mean, everybody's hurting, right?
Yeah.
Startups and all that kind of stuff, and people who have deposits in SVB. But then you get deals where the banks interact with the banks and the executives get paid the bonuses for handling this. I'm thinking, well, $10, $15 million worth of bonuses going out to these executives for what? That's just nuts. And, there's the thing about contagion, right? So we've all heard the word contagion. And what does it mean? How a failure of one bank can cause a domino effect, affecting other banks. Yeah. So we saw this in the financial crisis of 2008, right? Where junk of subprime mortgage mortgages and stuff like that was mixed in with good AAA debts. What's AAA debts? AAA debts are good debts where the banks sell those debts and get good interest money back from those because they know that those are going to get paid eventually, right? But all this toxic kind of junk subprime mortgages, stuff like that, was repackaged and mixed in with good debt to sold as good debt, right? So it was a bit of a mess. Yeah. As we all know, what happened next, right? The mortgages and loans and debtors were not getting paid and they all defaulted, and that's what happened with the financial crisis 2008. Now, could we see something same with this kind of event, what's happening with that? But luckily, SVB was only a regional bank, but
thank
some
God.
International ties.
Right? Thank goodness, right?
But their businesses was mostly focused on lending money to and offering loans and things like that for banking services for startups. Yeah. So over the years, like I said, these outstanding loans got bigger and bigger, and they were making more riskier bets. That's what kind of happened there. The news with SVB receivership by the government didn't help with the stocks of other banks, right?
No, it's bad news all around, right? Like all the banks started dropping. I mean, don't get me wrong. It's probably, if you're investing, it's probably a good time to buy a few of the banks that are, like, if you live in a country like Canada, you've got Royal Bank, CIBC, and Bank of Nova Scotia. Those are big ones, right? Those are big banks, right? So if you see a sale, it's probably a good idea to buy it because our exposure is a little bit different than the US, right? True. We're not as tech heavy, but we are heavy into natural resources, which the whole world needs right now, right? Yeah. So I think it's a good time to, and not advice. But that's it. It's a good time to step in and see what kind of deals that you can pick up in bank stock if you have that tax return that's coming around the corner.
Look at bank stocks which are not risk heavy and debt heavy and things like that.
And and you can also look at them in terms of dividend as well too. Like if you put in $1,000 and you bought at rock bottom price right now because the market's just responding negatively to bank stocks, and that goes back up, you're making 6% on every single share that you bought of that bank. Right. So that's money that comes back to you. So you could buy extra. You can put it in your you can save it for a rainy day. You can buy crypto.
Let it roll. Let it roll. Yeah.
Right. Yeah. So this is opportunity. There's opportunity here, but there is also opportunity on the backs of negativity, which is always unfortunate. Like we know some people that love oil. Yeah. They love oil. So they're purposely making negative remarks against the clean energy sector to boost their stocks. And we know a few people that do this.
Oh, yeah. Talking about that, I mean, because with the regional banks, one of them is First Republic. Okay, so they have, I think, over $116 billion of assets and loans and things like that.
Yeah.
And to avoid a bank run, 11 American banks, big banks, right, including JP Morgan, Bank of America, Wells Fargo, Citigroup, and all that, all of them joined up to deposit up to $30 billion to cover those deposits and customers' funds and things like that to prop them up. But that didn't help with the First Republic because the stock still dropped. and now it's given a junk status by analysts and things like that. It's just crazy, right? Man. Then there's the Signature Bank.
Oh my God, yes.
Which is more focused, more crypto focused, and it had over, I think, $82 billion worth of deposits, and I think another $65 billion in loans. They also went into receivership by the U.S. government because, it was kind of like the thing which, especially with cryptos and that, they want to protect that. I think that helped as well with recent prices of crypto going up. But, they had to step in again. So it was, luckily, these are not big multinational corporation banks such as JP Morgan and Bank of America. They were more regional and more focused on certain, like the SVB, focused on startups, right?
They had a niche.
Bank. Yeah. You had a niche, niche banks. Yeah. So it wasn't globally affected. But however, like you mentioned about UBS, right? And Credit Suisse. Credit Suisse was dropping for the last, I think 2 years.
Yeah.
And I think it's
dying.
They were dying, and it really affected them. And now UBS, I think we're talking, it's Credit Suisse, yes.
Yeah.
Had to get a money or loan from the Bank of Switzerland, right?
Yeah.
Like $53 billion, right?
Yeah.
And then UBS is thinking, well, should I step in? If I step in, I'm going to carry all this debt. I don't want to do that.
Yeah. Yeah. No,
they're thinking, it's crazy. But yeah, the banks are thinking twice about whether to step in or not. Because if they step in, they got to take up all this.
They're going to get muddy, right? They're going to get muddy. And there's a term in the Asian world. It's like taking shit and spreading it on yourself. Loosely translated, right? I mean, you're taking someone's shit and you're jumping into it. This is what's going to happen, right? If you get clean out of this, great. But who knows? What, like you said, this debt is mixed up. It's not just Roku. It's not just Roblox. It's not just the signature anchor stores in the mall. You've got all the tiny little stores all around inside that have really crappy debt credit. They may not work. They may never ever invent this thing that Google will buy. But they sunk billions of dollars into it. This is what you're buying.
I can see where Silicon Valley Bank really make their business is, like you said, startups grow for 2 or 3 years in what do you call it, incubators, right?
Yes, they incubate.
And when say big corporations like Google, Amazon, whatever comes and buys them out, they get
that's payday, right?
It's payday. Like they could buy someone for $10-15 billion.
Yep.
And that then boom into SVB Bank, and that covers most of their debt that they loaned out to startups.
That's your Uber, that's your Lyft, that's your all the tiny ones that got profile. Once that happens, either they go out on their own and they take off, or B, they have to sell parts of themselves into the larger corporations and take their payday. It's time, right? So either they do, it's either A, B, or you fold. In this case, a lot of companies will be folding. And you know what? We will never know who these companies are until all the NDAs expire, because a lot of these Silicon Valley investors that made their monies on startups, they're genuinely probably good people. I hear a lot of stories, you hear a lot of stories about the big investors, the big VCs. And then you have all these more like the angel VCs that see value in a lot of these startups. They're good people. They have good heads on their shoulders. And I'm investing in you for the next 5 years because I believe what you're doing is very important to the planet or whatever. We're never going to see these developments. We're never going to see them.
I know. It's a shame because there was a talk about will this affect future generations of entrepreneurs?
Of course it will. This entire generation is getting wiped out. So what's going to happen next? Who is going to take over and be the kindly VCs of the next generation? There's going to be a huge gap now.
this is what I'm going to think. This is what I'm thinking. Probably because of this happened, the corporations, big corporations like Google, Amazon, things like that, will start up like side projects using their own money. That probably the only way to invest in startups, because I don't think with this happened.
Yeah,
getting money alone from banks to do startups, I don't think that's going to happen for maybe foreseeable future.
But you know what's happened inside these companies like Amazon, Google, they've had these little mini incubators for ages now. And Google has been shuttering these incubators internally. They've turned off Stadia. They've turned off all sorts of things internally. Google Glass. All of these things are dying off because they cost too much to run internally, right?
Internally, so they need investors.
What's going to happen, man? Like, I mean, they need this to be, they need to pick up these projects when they're 75% to 90% done before they can take it to the next step and buy them, right? Amazon's still doing some great stuff. They run their AWS show every year where they do, they look at technology that's running off their cloud right now, and they're choosing to develop those things, like what the NFL is doing with sports and statistics and everything, what a lot of, in-home services are working on to leverage their cloud services for medical purposes and whatnot. But these are just things that aren't done yet. Like, these are still the companies still developing. They're just showing off them to see if anyone wants to invest more money into these. And if any of these companies want to invest, or any bank wants to invest, no more banks are going to invest in these right now.
That's true. Yeah. Right. Think about it, right? Amazon, Google, the great companies, very innovative and everything, right? But the one thing that they can't do properly or well is marketing. No. And marketing is a big chunk of money that startups use to promote their products, to promote their services. And probably, I would say, more than 40 to 50% of that money that they get in from banks and loans and things like that are used in marketing the product. Yeah, I'm telling you, it's a lot of money used for marketing to get your message across, to get your product across to consumers.
You got to meet people. You got to go to trade shows. You got to set up this booth that costs $60,000 to $100,000. You got to get a team over there. So every trade show you do is like $250,000 here. It's not cheap to do a trade show. Believe me.
Did you know, right? To send out a press release on a product or service, right? I know from marketing experience from other groups, it costs $5,000 for one press release.
Easily, because you want
it.
Yeah.
Like that's just an email.
That's an email. But at the same time, though, you're paying for that contact list, right? You're paying for a lot of things that if you had to go out there on foot and meet all these people and get them to believe in you, that's a lot of money, right? Yeah, for $5,000, you reach 100,000 people that are very, very interested in what you want to do. Great. If one of these, if at least 10% of them write about you, you're doing pretty well, because you've caught the interest of the industry in such a way that you can get more reach out of it. So
I think one thing that could help them, and they have been helping for quite a while, is the crowdfunded such as Indigo and Kickstarter. I think that's still going to go, but that's people's own money, right? It's not through banks or anything like that. So it's a way to help, I guess, but it can never replace a big loan or investors' money to promote and drive that product through. So
definitely not. Like, I mean, just recently a local startup, Hella Wireless, and again, nothing that they're doing is brand new. Another company locally, I think it's Automo Communications. They used to do a service that would allow you to buy a SIM card and travel to the US and get free and get data roaming and everything like that. I think it's Roam Mobility was the company. Automo owned them. So another company's coming up and they want to offer more services. Hella Wireless. Hella Wireless is doing eSIM for US travel, et cetera, et cetera. Right. More players, the better. And they are funding themselves with an Indiegogo. And the first customers will just get a SIM card and, you can activate the service and you try it out, right? But, this might be more prevalent. And I think that there's another term, the size of your hat. If you don't have a head that big, you can't wear that hat. You may find that a lot of VCs will be wearing hats that are more closer to the size of their actual heads.
That's true. That's true. I mean, I think for Indigo and Kickstarter, these are more consumer focused products that are reaching out to.
They do take a big chunk though. Like it's not like they don't take a small chunk. They take like almost 20%, I think. Yeah. It's a good chunk. Yeah. So their marketing, their services and everything like that, their platform is what drives it. And I think they're going to see some business very soon.
As I said, the only problem with Indigo and Kickstarter is that your product is visible. Yeah. Right. People know about it.
Yep.
Whereas if you're, it's just a startup and you have NDAs because this product is still incubating, it's still growing and stuff like that. We don't know about it until it actually gets launched in 3-4 years time. That kind of entrepreneurial kind of starts will probably won't exist as, going the next few years because, you want that, right? You want something that just, it's secret, right? And before it ever gets released. But
ideas like ideas and execution matter because I can give you a bunch of ideas. The ideas are useless until they're executed. So I can tell you to create this amazing satellite, blah, 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 techno babble, whatchamacallit. Until someone does it, it's bullshit. Right? It's bullshit, right? So
it's not there.
So if someone takes your idea and actually executes it, that's a completely other thing, right? That is like incubators protect the ideas until they're ready. But if someone has the capacity to take that idea and move it in 6 months, your idea is worth nothing.
You need a lot of money for that. Yeah. Because if you're doing a product, for example, right? You need a prototype thing. You can see and feel and whatever in your hands. Having a prototype costs millions. I'm telling you, when they had a prototype, I think it was one of these, I can't remember, it was a PCB board for one of the latest thing for the computer. And it was on show and display and it was a prototype. And I asked them, hey, when we're going to see the suit? Oh, well, it could be another 2 years, he says. But this prototype cost like $2 million. I thought, what the hell? $2 million for a prototype.
Yeah.
But they needed that. They had to make it so that it could then go to the next stage of production or whatever. And prototypes cost a lot of money.
And this is the dangerous time. And this is why incubators and NDAs matter in Silicon Valley is that if you want to launch a product properly and execute it properly, you need to take the time to make sure that all the dots and I's and T's and everything and it works out of the box as soon as you get it out there. And it takes so much time. Sometimes even within this process, because of the stress and the pressure to push it out, sometimes these products still fail, right? And but sometimes these products, the way that I guess they think about it is it's not as complicated to some people than it is to you. So maybe you're creating something you think is very complex and you get a bunch of people to dive in. But if the right person saw that prototype and they already had 75% of the expertise to execute it under your nose, that is the worst feeling.
Yeah, right? It is. Yeah.
And that's what happens in like when you go to some of these shows, like 1 year at Computex. I know the guy actually, he works in Vancouver now. He kicked out all of the Chinese vendors that were masquerading under Taiwan brands.
Oh, right.
Right. That 1 year.
Okay.
So they were there to do espionage. They were there to basically undercut, check out what was going on. And you remember that year, it was really, really shady because I couldn't take pictures. As soon as I oh, that looks like a PSP. I want to take a picture of that. And they're like, oh, no. That was the era.
Yeah. That was the year. That's right. We go to a certain booth and I can say, we can take some pictures because we want to promote their product or their company or their brand. And no, can't take it. No. It's not ready.
This is a trade show. What are you talking about? I'm pressed. What's going on? So they knew
it's not ready.
The jig was up, right? And this guy kicked them all out because they were actually using Taiwan trade names of real companies to come in and take their booth space. They actually paid them a ton of money to take their booth space.
It's basically espionage.
Yeah, they basically flipped their booth space, right? And not only were these Chinese companies kicked out, but also the local Taiwanese companies were also reprimanded and fined for doing this because it's not cool.
Yeah, it's true.
But these are things that could happen, right? You have your PCB out there, like you said, a $2 million prototype. You get it all going and everything because you thought about all the problems and how to fix them. and how to make it work. Then all of a sudden, someone's out there taking notes.
Yeah.
I'm going to go over this plan in Shenzhen. I'm going to turn this thing right out, and I'm going to build it.
Reverse engineer.
I'm going to reverse engineer it. Yep, I got all the parts.
Oh, it's crazy. Right? It's crazy.
That hurts, right? That hurts.
Yeah.
So, it's high risk, high reward, but the protection of VCs, NDAs, and incubators are very important to the economy in Silicon Valley because of all the possibilities of smarter people coming in and doing it faster and executing on ideas that, quite frankly, because of the speed that a lot of these imitators move at, you have no chance.
Yeah. That's true. That's true.
Right.
Well, go talking about loans and things like that. You know what? A sort of comedy sketch by the Three Stooges, right? I'm not sure it was Three Stooges. All right. Okay. Well, they owe money to each other, and they were passing money around between themselves. And in the end, the money that they owe to each other was paid off. Have you seen that little sketch? It was quite funny. So, you owe me $10. Oh yeah, okay, I'll give you $10. And then the guy says, you owe me $10. And then he passed that $10 to the other guy. And then, but you owe me $10. And then he passed that $10 back. And hey, everything's paid off. Is that how banks run? I
think this is a TikTok. Yeah, they're talking.
TikTok.
Yeah, TikTok does this sometimes.
Oh, that's crazy, right? And I mean, if you look at, for myself, I like a hands-on approach when it comes to managing my money, right? Yeah. And I know I'm going to need to do a little bit of research, managing my money and things like that. And, I'm more into a kind of a blockchain kind of like a way, so kind of helping me run or manage my money, because at the end of the day, if you put money in the bank is holding that money.
Yeah.
It keeps 10% of your money. The rest, 90% is loaned out, right? If I want to draw my money, they'll probably take deposits from other people's money to give it back to you. So, and if you have a bank run, they could just stop it, stop all transactions, not block your account, just the whole bank system just stops, and you can't get your money out. And one way for this is my personal experience. I was in Hong Kong back in the day, 2019-ish, and that's when I had the protests and things like that, right? So I had to think about, what's going on next? So I'm sending money back to the UK at the time because it's family money, right? So it's my own money. I got, work, got my money, got my wage, and I sent about, I think, $200 to $300 a month back to the UK through, international transfers and stuff like that. And then, of course, the protests happened, and there was a story about people were donating money to protesters and things like that through the banks and stuff like that. And they had to block all these accounts. And for me, because I had a British passport, I was in Hong Kong, and they looked at all my transactions, sending money back to the UK, things like that.
You're MI6. You're a spy.
Blocked my account. They blocked my account. Seriously, I couldn't access money, and I had to go in and clarify. I'm sending my passport, my details, my bank accounts, when was the last transaction you did to the UK, blah, 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 stuff like that. And then they unblocked it. It wasn't that amount. It wasn't that much. I mean, $200 to $300 worth per month I'm sending back. But that's what I'm saying. Banks can actually just block your account anytime. They can block your access with no updates, no message, nothing, no information, just they can block it. And that is why I decided to take control myself, right? The money coming in, I thought, before the crash of the cryptos and things like that, it was a way of putting my money into cryptos where I'd be able to access my funds, my own money, anywhere in the world without having banks blocking my access to my own money.
Yeah.
And this is my experience, and for others it could be different, but it has helped me. And for the last 4 or 5 years, I've done the same, because at the end of the day, I'm not doing anything illegal. It's my own money I earn from working, from a job. I just want to put that money, rather than in the bank, put it somewhere where I can actually access that anytime without having any issues with all that kind of stuff, through country restrictions and things like that. So, again, don't take my advice. This is my experience. And I thought, maybe something that, something that I will share.
Yeah. Cryptos go up, cryptos go down. Cryptos go down, 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 but they're coming back up. They're coming back up.
Oh yeah, yeah.
Which is good because I think there's some inherent distrust in the banking system, and a lot of people that were they had crypto exposure in the first place are now doubling down on their crypto to bring all their money and hide it somewhere else, put it somewhere else. That is not the bank, because this could happen to them, right? So everyone's pulling their bank, slowly pulling their money out, putting it in crypto, and it's at a low point right now. Like it's like almost 30%, 40% down than it was a year or 2 years ago. So if it goes back up 50%, 100%, and then takes off again, like it should in the coming while, I think that a lot of people will be in a better off position. But for those that didn't clue in, didn't realize that all this was happening. And there's a lot of people that don't know. Like there's probably a ton of people that are like, you know what? I want to put that addition onto my garage. I've been retired in Silicon Valley for X amount of years. We'll go down to the bank and visit them, and it's shut.
It's shut. Or you can't access your funds.
Where are my funds?
All accounts are frozen. No, so with cryptos, people are thinking, well, crypto crash, it's a big thing, right? I know, I understand that. The reason why people can't get their access to their cryptos or funds, whatever, through the exchanges is because it's on an exchange. You don't own the cryptos. Yeah. Right. So, from my experience, again, not my advice, I would use an exchange to buy the cryptos, and then from the exchange, transfer it out to a hard wallet. Yeah, right.
Hard or
what
cold
they call
wallet.
A hard wallet is basically a cold storage out of the system, not online. It's on a USB device, which then you don't lose it, right?
Yeah, you don't lose it. Yeah,
right. So it's out of the system, and then people go, well, how do you use it? Well, you don't. You just hold it. Yeah. Only use it or exchange it back to normal funds when you need to buy something big, if you need to, right? Yeah. If you do it daily, then it doesn't make sense. You just use the bank. If you want to buy stuff with credit cards and stuff, that's fine. You just use the bank. But if you want to store something for later, like I said, if you want to buy something bigger, whatever, then it's there. You just need to exchange it.
I guess the only
USB
problem
device
is that your USB device, let's just say that you put everything in cold storage, then you go to the bank and put it in a safety deposit box. Then what happens? the bank is shut.
Oh, the bank is shut. You can't access it. See, this is it. I think a lot of people I know don't just have one USB device. They have several. Yeah. Right. And they don't store everything in one device. I would say I would do, like I said, you just cover all your bases. And then just kind of spread the amount all over the 4 or 5 USB keys that you have, and then just store. I think there was one family that they call it the crypto family. I'm not sure where he's from. I think from France or something. Yeah. He sold his house, sold his business, and everything is on crypto wallets, but hard wallets. But they're all over the world. One's in, I can't remember, one's in Caribbean islands somewhere, and the other one's in France. Wow. The ones, and they're just traveling the world, living off whatever, but they're just saving that kind of lifestyle, using that kind of cryptos, I guess.
Yeah, it could be very complicated for most people that aren't thinking this way. Like even myself, I consider myself technical, but at the same time, I didn't actually get into purchasing. I didn't actually take advantage of my TFSA until the start of the pandemic. This was like 2-3 years ago, where I'm like, oh, TFSAs, you know what? That's one thing I never maxed out. So I started playing with it, with stocks and everything like that you can buy inside there. And started buying dividend stocks, which actually paid me back every month, right? And it was a good run for a while. I also purchased some things that weren't such great purchases, like Wish. Oops. I bought at $10 a share, and now it's like in 98 cents. So I'm like, I lost 90% of my money there. Thankfully, it was only $400 that I put in. A lot of people put in thousands. Their life savings in, then it dropped. Like, I feel terrible about those people, but it's all about, and this is not financial advice, but it should be, don't gamble.
Well, gamble. I said you got into what we call ETFs, right?
Yeah, I got traded funds. Yeah, so my ETFs
are safer.
Go ahead. Explain that.
Well, from what I gather, ETFs are safer because it's an electronic traded funds, right? Yeah. You don't actually need to buy any single shares. The fund holds a whole range of diversified stocks and shares and things like that, and you just buy into the fund. If those shares or stocks that they own go up, then of course your value of the whatever you buy in ETFs go up. But you don't have to worry about, oh, this share's going down, this share's going up, I need to sell. No, just let it run. Statistically speaking, ETFs actually grow over time.
Yes,
they whether it's like 2-3%, but it may be a low number, but hey, it's growing. You don't have to worry about it. You just leave it there for whatever number of years. You've had that experience with ETFs, right?
Yeah, like I actually have 2 ETFs in crypto. I have one that is by CI and also another one by another institution, and both of those have the management rates, but they're usually very low, like 1 or 0.5%. And the system just basically buys crypto as it trends, right? Yeah, and then goes in. Yeah. And because of that, my loss in crypto wasn't as great as the actual market drop. Yeah, it was always protected.
Yeah, I mean, that's right. If you bought a single crypto yourself, then if it drops, that whole drop, you feel the brunt of it. Right?
It kills you.
Whereas
right?
an ETF, it's diversified over different cryptos, right?
Yeah.
And they do the trading.
Yes,
of course. And there's not people pressing button, buy. No, it's all computer and algorithms and things like that. They got a computer with algorithms to trade stocks.
Yeah,
that's what ETF funds do.
Instead of seeing this, it was more like, and I could actually, if I saw that happen, I could either get out or I could buy on the way down if I wanted to. Right. Yeah. So I did buy a couple times on the way down, and because it's back up on the way up, my losses were actually a whole lot less than the market. Right. Because I could actually say, you know what? Yeah. Okay. Yeah. That's a good time to get out, or I need to sell off a chunk of this. I can only afford to lose half of this. And then I can come back in later. Right. Or I could buy something else in the meantime and then dump it back in later. And the nice thing about the Canadian gifts that they give you is that by the time you turn 18, you have $6,000 a year after you turn 18 to put in, like, I think it was 5,000, 6,000. Yeah. Like you have an ETF, you have a TFSA amount. This is a free savings account. UK has a version of it. I can't remember what it's called, but it's free money for you to earn interest on as you deposit it. This is after tax money, of course,
and
right?
It's tax free as well, right?
It's tax free within that. So as long as you're not day trading inside these accounts, you're holding stocks, and you're holding good dividend stocks with stability, you can make a lot of money inside these monetary instruments, right?
It's like a 5 to 10 year investment because it's protected by the government as well, right?
Like if I take all of my limit, which is a lot now because I'm old, since I was 18, like that's a big, that's a lot of $5,000 per year allotment that I can just throw right in. And I haven't even maxed it out yet, but because it continues to grow inside that TFSA, what I've earned, even with the losses, what I've earned is more than what I could contribute in cash every single year. And it's neat. So there's a lot of ways to save money safely. There's even TFSAs, they're not stocks. You can just put it in a high interest bond and leave it there.
Yeah, that's right. That's right. I mean, do some research. There's plenty of savings accounts or funds that you could get into. Again, we're not financial advisors, but do some research yourself. I mean, in the UK, we have something called ISA, right? And
I think it's the same thing.
£20,000 per year, tax free.
That's a lot
that you could put in, right? If it earns, say you put £20,000, right, for that year, that's what you maxed out for that year, right?
Yeah.
And then so your stocks go up like 100%. You earn 20,000, so it's a total of 40,000 your ISA account now, and that's tax free.
Yes, and
that's crazy, right?
Now in Canada, you can withdraw any amount that you want, but you can't put it back in until the next year. That's the only thing. So let's just say that
it doesn't roll over.
It doesn't roll over. So let's just say that you have $6,000 in contribution room. You contribute $6,000. You earn $28,000. That means that you can take out that $12,000, $22,000 if you want this year, but you can't put that back in with your next contribution limit, $28,000, until the following year. So you have to remember those rules. But there are rules in place because it just makes it so that you aren't laundering money.
That's true. Because big thing is money laundering is a big thing for banks and things like that because even HSBC got done, right?
Yeah.
The biggest bank in the world got done for money laundering, things like that. And there's tons of things like that happening with banks.
Yes.
Don't think banks are all legit. They are legit legally.
Yep.
In your eyes, in the government's eyes.
They're regulated.
But in the back, they're regulated and everything. But in the back end, they do a shitload of stuff which you're thinking, whoa, what's going on here?
Yeah.
I'm telling you.
I worked for a bank. I worked for a bank a long time ago. And there was this, I didn't know what was happening, but people who worked in the bank were in this part of the bank. And what they did was, in order to float all ships, they would send these accounts over to me to fulfill. I'm like, hey, what is this? Like, oh no, we've opened a bunch of accounts. Don't worry about it. Just take these files.
Don't worry about it. Yeah. Don't worry.
Right?
Don't worry about it.
We're taking care of our division. Don't worry. We need to have X amount of accounts. You guys don't have enough accounts in your area. We're just sending these over to your branch to fulfill. Oh, okay. And it turned out to be a thing, not a good thing, because I had no idea.
Don't worry about it.
So this stuff happens.
It happens, mate. So don't think your bank's all clean. A lot of the banks, not all. And it's only certain branches that do certain things, but in the end, you got to think, okay, you still need banks. You still need banks to do the mortgages for your house. Yeah. You still need banks to do certain things, which, legitimately and legally. So you still need it.
I almost want to say that if you want to be more supportive of your local community, maybe consider getting into a credit union that's locally owned and operated, that invests in your city, that they have enough funds covering most of the loans and within certain guidelines that, they won't go under. They're also supporting your little league teams. They're also supporting all sorts of community events. That might make you feel better about dealing with the bank because it's doing something for your local good. Yeah. So there are a ton of them out there. Look into them yourself. There are even credit unions where people have gotten so upset about dealing with banks that they just set it up themselves. Sharon's Credit Union is one of them. It's in Coquitlam. That's one credit union that was built on the back of the frustration it had with a big bank.
With these credit unions, are they also backed by the government as well?
They are. I think there are rules, but I think there are rules for the deposits, but there's certain things about it I don't know 100%. That's something that you could really look into. But for the most part, I think most people trust credit unions as much as they trust the big banks in this case, right?
Yeah,
so
I think it's all about trust. Yeah. And, with banks, can you trust them? From my personal experience, I don't trust them at all. I mean, even in my current account right now, my checking account, I only had $200 in there. Yeah. I don't care. I'm just going to leave it there, $200. If it gets hacked, if it gets frozen, I'm only losing $200. What happened to the rest of the money? It's out of the system, boy. I'm not going to leave my money in the bank. Let me tell you. Okay, have I got cash in the house? No. Where is it? Well, somewhere. Somewhere. I'm telling you where, but it's what I'm saying is manage your money the way you want to manage, right? Yeah. Take control of it yourself. How? Well, do some research, check online. There's plenty of information to go by. So that's my take on it.
Yeah. And also your retirement and everything like that. I know a lot of people just want to talk to a financial advisor and just have them set it up and everything like that. They do have access to some really cool things that normally you wouldn't have access to. Like I have an RSP fund that grows in the background, but if for any reason I die, it will have a payout amount that's a percentage of what it's worth. It will all go over, even if there's a crash. It's always guaranteed to be this ratio.
True.
So there are things that they have that you don't have, but you do pay for that privilege. So keep that in mind.
Yeah. Well,
and do your research.
Okay. So that's all we have time for in our podcast show this week. If you have any questions about SVB and any of the banking stuff, crypto stuff, please leave a message down below. Again, we're not financial advisors and we're not financial experts. So what we're saying is through personal experience and also some of the stuff that we heard on the news, on the internet. So with that said, again, where can we find you, Stephen? Tell us a little bit more.
You can find me on the still free Instagram at Stephen Fung, and also the still free-ish Twitter at Stephen Fung. until they start charging us for two-factor authentication and all those other things.
Yeah.
So we may have to, we may have to find other places for you to find us later, but you can always find us in the comments. Please comment. I know there's one guy over there down in the comment. He says he's 192, but we lost 2 subscribers since the last podcast. What happened to you guys? Did you really have commitment issues? Please come back. Come on, we're friends. How about you?
Tell us. For me, you can find me on Instagram at Winston Chim. Again, mostly lifestyle stuff, and also at Twitter at Winston Chim. But I heard that Instagram's going to charge, or Facebook's going to charge for.
Meta's going to charge
as well.
Meta's thinking about charging. Elon already wants to charge us, but he's having a hard time getting the pricing and everything right for the no longer free tier. He's already charging $8 a month for the check mark, which means absolutely nothing now.
Yeah.
Because there's a yellow one out there too. Like, I have no idea who's legit now. Like, everyone looks like they're legit with that stupid check mark. It's really ridiculous.
I know. I'm not paying for that. I mean, if for businesses, maybe, right?
Yeah.
For legitimate businesses and stuff like that. But I'm not sure if I can pay for personal accounts. I mean, internet's meant to be free.
Yes.
Maybe that's another topic for another time.
I thought that's what Elon said. It's supposed to be free. Why are you charging, Elon? Why you gotta be like that? Why you gotta be like that? Anyhow.
Okay. Well, thanks for joining us. Tune in for next week, each and every Wednesday, where we have a new podcast with Stephen and I with some great topics. Until then, have a great time. See you soon. Take care.
Bye-bye.
Bye-bye.